Troy Boisjoli, CEO of ATHA Energy Corp. We are a large-scale uranium exploration company across Canada's best uranium jurisdictions, led by our growing Angilak project.
Troy, good to see you. Last week's press release caught my eye. Pretty good news.
Yeah, we're excited. We've had this project now for just a hair over a year. And have done significant work there. As you'd be aware, Matt, coming off a drill program last year where we put just over 10,000 meters into the property, expanded the zones of mineralization in multiple directions. Very successful. 25 drill holes, went 25 for 25, and then in parallel to that, what we did was a series of work and a significant amount of work to be able to quantify and define the regional or district scale potential of this of the Angilak exploration project, and the results that we had from last week, which was a structural study that tied it all together, has done just that and has us very excited.
Well, look, we better remind people exactly what you picked up in the shape of Angilak. What did you know before all this recent drilling?
Yeah, before the recent drilling, Angilak's a project that we really like. We like it off the base of the historic resource. That's 43.3 million pounds at 0.69% U3O8, which provides a fantastic foundation for the project. But more than that, we bought it because we believe that this project has a very high metal endowment. There is surface samples in tens in locations on surface around the property. And then as a function of that, as I mentioned, we stepped out. We expanded mineralization with drilling, 25 holes last year, defined mineralization in parallel corridors, LAC 48, LAC 50, LAC 52, LAC 54. We wrapped an exploration target around that, Matt, and that exploration target had a range of 62 to 98 million pounds. So we like it. It's a project that we feel has tremendous scale opportunity. And what we've done over the course of the last year is build up our exploration model and build up a thesis that we believe has tremendous scale opportunity in terms of additional discoveries and really step change when we're talking about that, because we're seeing grades on surface up to 47% U3O8 that haven't been tested. We're seeing a trend under an untested basin similar to the Athabasca Basin that's 31 kilometers long, 31 kilometers, and has mineralization on one side of it and has mineralization on the other side of it where it enters and where it exits that basin. And when I'm talking about mineralization, I'm talking about mineralization in core above 5%. I'm talking about mineralization on surface above 30%.
So that must give you hope for a lot of contained metal in there. But you got to get after this thing, spend the money to do this, because that's, as you say, it's comparable to a big chunk of the Athabasca Basin at the moment. So how do you price this? When we talked in the past, you talked about maybe 70% of your efforts on Angilak and 30% elsewhere. Does this change your emphasis, your allocation of capital?
Yeah, we're gonna be focused. Over the course of last year, we defined Angilak as a very unique uranium opportunity, not just within Canada or Nunavut, but globally. We see the scale potential here as top tier scale potential, and we built up a long pipeline of not just work that needs to get done proximal to LAC 50, which is the deposit, but also these high grade, high potential targets across the Angikuni Basin. And so, yeah, we're going to focus the majority of our work on Angilak. There's obviously still going to be a portion of that. If you understand our portfolio, we have the largest land position in the Athabasca Basin and the Thelon Basin. The generative stage pipeline is still important to us, obviously, and we're going to continue to invest in that. But in terms of drill meters, drills turning, holes in the ground, Angilak. And within that, Matt, you think about what we're going to do there, and we don't yet know the edges of the system, which is a very good problem to have. That's a very good position to be in. And so this year is going to be about expansion. It's going to be about continuing to build on the work that we did last year in the LAC 50 region. But then in addition to that, the area under this Angikuni Basin that is when you think about targets, when you think about how these targets are built up and analog targets, in the Athabasca, what you look for to develop high-grade uranium systems is you look for dilational structure. Getting a bit deep in structural, you're looking for dilational structure. The reason you're looking for that is that has the ability to move a lot of fluid. You want a lot of fluid moving around, and then you're looking for structural traps and chemical traps. And obviously, you want to have a fertile uranium system. You want to have a system that has uranium in it. We have those key components, and we have those key components at scale. So we're really excited about the high-grade potential underneath the Athabasca or underneath the Angikuni Basin with Athabasca style, deposit potential. And we're equally as excited about the Lac 50 region that has the Mushroom Lake outcrop coming right off of the Lac 54 trend that has uranium on surface up to 47%. That's untested.
Okay, we'll come into that. Believe me, I've got some questions for you technically in a second, but just to kind of set the scene for maybe people invested in other uranium projects or looking at uranium anew here. How do you position yourself now? Because when we first met, big land package, exploration, that was the name of the game here, all the potential and the blue sky and the upside, etc. But the market was rewarding developers last year. That's what people are looking at. Do you consider yourself a developer now, or are you still an explorer at heart?
Yeah, hey, we're still an explorer with a line of sight on a project that has what I consider tier 1 scale potential. And that's a bit of a nebulous definition. What is tier 1 scale potential? We have an exploration target that ranges from 62 to 98 million pounds. You look at projects that have that type of potential within the uranium space, and there are very few. And that's not even that's just based off the drilling we did last year and the historic drilling in the area. That doesn't account for what we're talking about right now. Okay, so where do we fit in the market? There's obviously producers, then you have development companies, and then there's a couple companies that would be in that more advanced exploration resource growth phase, and building resources, right? And that's the stage that we're at.
But what's the name of the game in the uranium space? Like I can most people understand gold, silver, copper, etc. But uranium, because we've had this kind of long period of pause in the market, people aren't quite sure how to, I guess, assess the ability for some of these companies to actually get into production anytime soon. So for you, you've got a resource. You're going to get after this resource. You've got the exploration there, but you've also got this kind of developer profile as well with that resource. For instance, how much additional drilling are you going to be doing, opening up this new district of yours before you put out something like a PEA or a resource or a PEA, updated resource or PEA?
Yeah. So in terms of a PEA and moving into a development stage, critical path for us. First, maybe I'll back up, Matt. Critical path. We need to find the edge of this system. We won't move into resource growth per se, delineation, etc., until we find the edges, and that's for good reason. You want to understand the scale of the system before you start drilling for confidence, before you start drilling for certainty, before you start drilling for classification, etc. And so that's the stage that we're at. But that's a really exciting stage in terms of the growth opportunity, the scale opportunity, etc., and the function of how that has the potential to be viewed from a market perspective. But then you look at how you move uranium projects forward, right? And that we've talked in the past. We're in a fortunate position within ATHA to have a team that has a significant skill set and experience set in moving uranium projects forward, right from early stage exploration through resource growth, through project development into operations. In a past life, I had the good fortune of being the chief geologist at one of Cameco's mines. Our vice president of exploration, Cliff Revering, he was the chief geologist at Cigar Lake, at Cameco's Cigar Lake operation. So we have a team that has the ability to execute, move this forward, and move this forward rapidly. Because to your point, how do you go from being Explore Co, Development Co, into a producing co? And it takes obviously capital, but it takes people to be able to do that as well. And we've got a deep team, we've got an experienced team that's actually done this before, which allows us to think about how we optimize processes from this point to move this forward rapidly.
Okay, so we've seen some sort of outcrop samples, like you said, 47.8%. It's great. It's all relatively shallow drilling as well. But what are the kind of major structural controls that you're looking at, and how are you using that to actually sort of target? Because you want to find the edge of this thing for sure. It looks like it potentially is very, very good, but you've got to deliver on that. So what's the process that you're utilizing?
Yeah, it's about systematically de-risking and building up stacked layers of evidence to increase probability and reduce risk at a very high level. That's a bunch of jargon, Matt, and I'll unpack that a bit. Okay, so what we've done starts with geophysics. Okay, and in the past, the only geophysics on the property was very shallow EM. That shallow EM did not have the ability to see through the sandstone or the Angikuni Basin. So we've got the LAC 50 area that sits right at the edge of a basin that's analogous to the Athabasca in terms of timing, etc. We flew geophysics, we compiled surface data, surface samples, etc., did bedrock mapping, outcrop mapping, and then in addition to that, had a regional scale structural interpretation from SRK, Ron, who's a tremendous structural geologist. And what that study defined as a deliverable is there's a regional scale linking structure. It's a dilational structure that goes right across the Angikuni Basin for about 31 kilometers. That correlates exceptionally well with our EM targets. And then you start to overlay the geochemistry on top of that. And Matt, I mentioned that we have uranium and core on one edge of it. That's a rib area. It's not only uranium and core, but we also see alteration structure and lithologies, graphitic mylanites. That's indicative of Athabasca style targets. And then on the other edge of that, we have the 9 iron area. At 9 iron, we've got 30% on surface in surface samples. But the really, really compelling part is along the trace of that structure within the basin, we're seeing sandstone samples on surface that are in the multiple percents. And for most people, I'll explain that a bit. That's really compelling because across the Athabasca, you don't see that. When you look at alteration halos above major deposits in the Athabasca Basin, say Cigar Lake, MacArthur River, etc., what you see in terms of uranium values in the sandstone, call it 10 to 20 parts per million on average, and paralleling these corridors in the Angikuni Basin on the Angilak project, we're seeing uranium and sandstone in the 10 to 20% range, which is really exciting.
So you're seeing these geological similarities, but what's the thing that kind of makes this different? Because I'm intrigued by what you say about it compares to the Athabasca, but what are the differences? Because that also informs the way you come at it.
Yeah, well, one of the big differences is myself and our team, we've explored across the Athabasca in detail, and spent years of our lives actually in the field in the north. And the metal endowment that we see on surface here, in terms of the sheer volume of locations that has mineralization localized on surface here, is something I've never seen. I've never seen it in the Athabasca Basin. I've never seen it in any other, in the Cameco Basin in northern Australia, in these major Paleoproterozoic large sandstone basins that are uranium bearing. I've never seen a surface expression of mineralization like this, which is truly unique. And I think the other difference is we control this jurisdiction. We control this entire area. We have a first mover advantage here, which we really like, and it's highly underexplored. There is a small fraction of the exploration that has occurred within the Angikuni Basin in this area than there has been in the Athabasca. So you start to layer on those non-technical attributes, and then you look at it in the context of how we've built up the target model and the exploration model within this area that is based off first principles. And we really like the position we're in, and we really like the Angilak project.
But how do we investors sort of comp that against, like, there's some very high grade basement hosted deposits in the Athabasca, next gen, ARA, with ARA, Cameco, MacArthur River, etc. And people go, well, that's what good looks like. Are we talking about something comparable? You use the word, I've never seen anything like it. Are we using something comparable? Are we saying, well, actually, if this is the potential to be better, and if so, how do you go about proving that out?
We prove it by continuing down the road we're on. We're on that track right now, and we've got de-risk targets. We've got a team to be able to execute and unlock the potential that we've started to unpick here. But from a comp perspective, okay, a historic resource at Angilak, LAC 50, 43 million pounds of 0.69% U3O8. Bring that back to the Athabasca Basin. Cameco's Rabbit Lake operation, Eagle Point mine, about 70 million pounds remaining there at average rate of 0.7%. Okay, so when we're talking about uranium grades, that's the profile that we're looking at. And then you look at the results from surface, and those are step change kind of grades. Okay, you're talking about uranium grades on surface of 47.6% in grab samples. You're talking about outcrop samples that are 30%. Shows the strength of the system, has the ability to localize not only high-grade uranium, but what you would consider in the Athabasca as ultra-high-grade uranium.
Right, okay. So if I'm looking forward to 2025, and we're talking about how you prioritize the drilling there, can you tell me a bit about that? Are we lots of holes and shallow? Are we, how many meters? What are you targeting?
Yeah, well, shallow is an important component of this. The LAC 50 trend comes right to surface, and we've started to expand on strike. And when I say started to expand mineralization on strike, we've only tested, say, 25% of that region, and it goes right to surface. We have mineralization down to, say, 350 plus meters there, but comes right to surface. So shallow holes, expansion of the mineralized envelope around LAC 50, Mushroom Lake outcrop, about a 3 kilometer long outcrop, high grade surface samples, no drilling. And so the opportunity there is pretty exciting. And then you start to think about this 31 kilometer trend coming through the Angikuni Basin that has mineralization on one side, mineralization on the other side along this structural trend that's underlaid by very large conductivity features. Mineralization on surface. It's going to be a multi-pronged approach, Matt. We're going to continue to work from known outward around the LAC 50 trend, and then we're chomping at the bit, so to speak, to get into the Angikuni Basin.
I guess it's kind of interesting, actually, when you talk about that kind of the shallow nature of this. You'll want to poke a few deeper holes in at some point in the future, but you don't necessarily want to blow through your budget quicker than you need to as well. So you kind of got that in the back pocket. Is that right?
Yep. Yeah, no, absolutely. It is completely unconstrained at depth. But when you're working along these systems, from my experience, Matt, you step out on strike. You do the shallow work first, you find the edges of it, and then you explore at depth. And we aren't yet even at the position where we've been able to cover off the strike extent. And so, but you look at along the entire LAC 50 corridor, it is completely unconstrained at depth.
I guess when you look at some of the these very sort of much deeper projects in the Athabasca Basin, it dramatically changes the potential economics going forward. I guess that's something that we may be able to get excited about in the future if you keep finding what you're finding. Right. Let's talk about some of the, where you are. Okay. So, you're much further north, obviously. So therefore things like roads, airstrips, power, and the rest of it, how you set up?
Yeah. Hey, it's a remote area. It's in Nunavut. It's a remote location, but scale solves for that. And we're thinking about this project from we're thinking about this exploration project from an operator's perspective. We understand, we understand the project, we understand the area, and we like the profile of the mineralization we see in terms of the grade profile. We like the scale potential that we see, and scale solves for remoteness. Nunavut is a very, very positive jurisdiction. Right around 50% actually of the GDP in that area in Canada is a function of mining. Mines get built in Nunavut. And so we like it from a geopolitical perspective, we like it from a jurisdiction perspective, and we like the technical attributes of the project, and we like the ability to continue to build on the scale that we see there already, and the scale that we see already is significant.
Okay, mines get built there. That's a big statement. So in terms of existing engagement with Nunavut regulators, Indigenous communities, etc., is like people have been drilling there for a while, but is that something that you need to renew or just pick up where they left off?
Relationships are, our interpersonal relationships are a key factor to building projects, building support for projects, etc. Even before we started to work on the ground there, when we took ownership of it, we started an engagement process, and we will continue to engage with local communities, local governments, etc. We do have an agreement in place on the project that came over from Latitude and previous operators that has us, much further ahead, I would say, than a number of other early stage projects, and we like it. We like having that in place, but from a engagement perspective, we continue to place it, obviously, a high priority on it. The project's fully permitted and ready to go with multi-year permits.
Okay, and at what point do you guys start looking at things like some baseline studies or environmental? Because these are long lead items, as we all know. How does it work up there, or is it going to be quite similar to some of the projects down in the Athabasca?
Very similar to projects within the Athabasca, in that the life cycle regulator in the uranium industry in Canada, right from a license to prepare, site, and construct, to operate, to decommissioning, is the Canadian Nuclear Safety Commission. So whether you're in Saskatchewan or whether you're in Nunavut, it is a rigorous process. I've been involved in the process with a couple different companies. Rigorous process, but it is, at the end of the day, a process that gives you a high degree of confidence and certainty as you move through it. And Canada has been either number one or number two in uranium production for decades. We know how to build uranium projects. We know how to regulate uranium projects, and we know how to get them permitted. So from a permitting perspective, it's about understanding the process and how to optimize a way through the process. And from a baseline perspective, this year is about expansion. Very early on, though, you can start to attack timelines by pulling work forward in parallel, and that's part of having the good fortune and the benefit of being through a process like this before, is that you can look at how do you optimize from this forward, from this place forward into, say, project development with line of sight to moving projects forward.
Right. Okay. So if I'm looking at what you've got, like, you've got an historic resource there of quite a decent size already compared to a lot of what else is out there. You're up there, top 5%, top 10% of companies from a resource perspective. Your view in terms of how you position this company, can you just be so clear on that? Because how big do you need to get to be noticed in terms of the resource, and does it really start coming down to the economics, and what does that look like in an environment like today, where spot prices a little bit sort of out of whack, and quite frankly, I think some of the valuations of most uranium companies seem to be dependent on the spot price.
Maybe an easy way for me to help describe the scale that we see at the Angilak project map is you overlay the area that we have for the Angilak project, you overlay that across the northeast Athabasca Basin, in the producing regions. It goes from the area of the Angikuni Basin that we have. The Angikuni Basin itself goes from Rabbit Lake to Cigar Lake. You have two mills and multiple mines within that footprint, within that area. So when we talk about scale potential, the area of the project is very large. It's significant. It's underexplored. The sheer number of surface uranium occurrences that exists there is unlike anything I've seen within the Athabasca region. There's a historic resource there of 43 million pounds at 0.69% U3O8. There is an exploration target based off of just 1 year of work within our control, where it's 62 to 98 million pounds. So in our view, the scale of this project, the forcing function right now is work. It's doing the work. And then in terms of where this thing would fit into the overall scenario, that's where you start to look at the fundamentals of the uranium market. And the fundamentals of the uranium market right now are pretty clear. Okay. We have demand that's been layering on. There is a significant gap that's coming up in that 2030 decade that not only is going to require the Rook Ones of the world, which, you know, is tier one by any metric, or you look at MacArthur Cigar tier one projects by any metric. With the amount of demand that's being layered on right now in the uranium space, we're going to need projects like that absolutely have to get built. And then we're going to need the projects that have scale to get built. And then we're going to need incremental production that comes in and tries to balance the market in terms of smaller scale, smaller production coming out of, say, US markets, etc. So we're going to need all of them in order to even come close to balancing this market. Because in the 2030 decade, as you're aware, you have Cigar Lake that wraps up. You have MacArthur that's winding down. You have Kazakh ISR that tails off past peak production and starts to decline significantly into that decade. So now, in our view, is the absolute right time to be building a scalable uranium project in a very good jurisdiction.
I get we need all of the above. I don't believe we're going to get all of the above, but we need all of the above. So my priority now as an investor, I'm trying to prioritize the ones most likely. So you're an ex-Cameco guy. You know what the big guys are looking for. You know what's important in terms of getting an economic project into production. So what is the kind of the valuation stack that you look for? And, you know, what's the basis? What's the base from which you're starting to be able to, you know, achieve those goals that you're going to set yourself?
Yeah, the goals that we look at it very objectively. You know, we can use benchmarks across the board in terms of you know, cost benchmarks, etc. We understand what the size of the prize needs to be at Angilak in order to move this forward into a development stage. And where we're at right now, Matt, is we're driving towards that. We're driving towards defining that scale that kicks it over into development stage as rapidly as possible.
Okay, so but give me that, because I like to say, I want to put my investor hat on and go, right, we need a resource. What size does it need to be, bare minimum? What sort of grades could we possibly look for? Like, I appreciate it's going to be hard for you. I don't want you to do forward looking or anything, but in terms of what are the things that you're sitting down in the boardroom and saying, like, guys, here are the must-dos this year that we must achieve. And, you know, the ideal is we end up somewhere over here looking like something like this.
Sure. So let's back this up and just say at a project perspective. Okay. I look at Angilak, and if we look at that and we say price is obviously a variable on this, look at a range, you say anything in that 80 to 100 million pound range starts to look very, very attractive from our perspective, you know, over and above what we have already. Starts to look very attractive at Angilak. You say anything above that, and it looks exceptionally attractive from our view, from our perspective, from a project level. And so, you know, those are some pretty simple metrics that we use. It's early stage, right? We obviously have not done engineering work, etc., but we have a team that does know the space, Matt. We know the space well, from exploration right through to operations and production. And, you know, what we see at Angilak, we see the LAC 50 region that has that exploration target that we discussed. That's just one very small piece of this property. And then you start to piece that out. You know, you can almost just take that area and you start to overlay it on top of a number of targets that we have that have the scale that we're talking about. And that's where, our team, Matt, truly believes that the forcing function here is work.
Okay, well then, let's just wrap it up. Just so I go away, so remembering the kind of key things I need to remember in terms of those milestone deliverables this year, because you've got the balance sheet to be able to do what you need to do this year. I'm assuming. Have you?
Yeah, we've got crews that have moved in right now, building as we noted in the release. Clearing off the airstrip, etc., getting people scrambled into site. And yeah, we maintain, we've had strong access to capital, and we maintain a strong balance sheet, Pat.
Right. Okay. So crews out there, drilling. Can you remind me how many meters we're aiming for this year?
Yeah, we're still putting the XYZ drill targets on this thing. As we speak right now. Last week we had deliverables on a significant portion of work that had to find a large number of targets. And so the XYZ drill meters are still being compiled as we speak right now. But expect a material program this year.
Right, okay. And with regards to the market, just briefly on the market, if you don't mind, it's a reference earlier. It's slightly tricky place. If you're an explorer with no capital, it's an extremely tricky moment at the moment. Retail seem to be biding the time and waiting to see what happens. People are looking at spot, despite whatever term contracts being the kind of key driver in the marketplace. Do you expect some kind of reaction this year to what's going on elsewhere, whether it be sort of Russia, Ukraine's cessation of activities there, maybe access to more Russian material inventory, I should say? What's Trump doing for you? It must seem like a whirlwind if you're trying to operate in an environment like this.
Yeah.
Everything's changing daily, but what's your sort of views on it?
Yeah, my view is, well, I've got obviously lots of views, but we fundamentally underpin our strategy at a macro perspective, and this is a generational period, point in time in a commodity. You have to look back maybe to the 1970s within the uranium space, where you had to build up, a stacking on of demand like we're seeing right now. The train has left the station, Matt. These things are getting built. The demand is increasing, and the reality is that there's not enough supply. That is just the stark reality. Okay. And so from a near-term perspective, there's going to be volatility, especially in a thinly traded spot market that doesn't represent the total market. But we also understand that we do need to return back to a contracting cycle in the space, and a contracting cycle that not only gets back to replacement rate contracting, but goes above replacement rate contracting to build up inventories again. And more than anything else, it has been contracting cycles that have put upward pressure on the prices, on spot prices within the uranium space. You look back to the 2006-2007 timeframe, entering into a period where there was significant volumes of uncovered contracts in the market. That contracting cycle led to significant upward pressure in the spot price of uranium. Because, as you noted, spot price isn't the only thing that matters, but from an equity, a correlation back to the equities, it probably matters as much as anything else put together.
Well, I do agree with you with regards to contracting is needed again. I agree with you that the demand is there again, and it's going to be a supply response issue. My concern with the space is I don't think the supply currently advertised is going to make it. Not everyone's going to make it. It's just the nature of mining, right? What does that do for companies with sort of bigger assets, better grades, and the ability to kind of move this, fund projects going forward? Do you see that as sort of opportunity for yourselves to stand out?
Hey, we do see that as a very big opportunity. There's not a that. You're close enough to the space, you understand this, okay? There's not only a scarcity of, there's not only a supply shortage with existing operations, okay? The existing supply cannot, on face value meet demand. There's a scarcity of development stage projects of scale, you look across Canada, there's two leaders. So there's obviously NextGen, there's Denison at some scale. You go beyond that, and the at scale opportunities in the market are very, very few. Then you go, like usually these things are built up, right? Where you have producers, then you have developers, and then you have a significant base of projects that are waiting in the queue, ready to move forward. That is not the case within the uranium space, and that's a function of really not unlike other commodities where low prices as a function of that, you don't have risk capital to do exploration. That's happened in the uranium space, and it's happened for the last 15 years. And so there is not a foundation of projects ready to move into a development stage, which then when you think about that, has us excited about where we're at and where we're potentially going based off of work that needs to be done.
Yeah, because I agree with that. Like with my banking hat on, I'm going, I want to understand that the company's going to be capable of delivering a world-class asset. If it can't, I think, as I rudely call them, these 2 men in a wheelbarrow type projects with, small resource potential, that's a real problem for me. But in the sense that I'm going to struggle to justify investing in companies like that, and that I think we're starting to see across the board. Perhaps some roll-ups happening in the US. That's what we need to see. Let's wrap it up there. Great press release in the sense that this suggests something big, but you got to get after it and prove it. So we'll leave you to it. See you soon.
Excellent. Thanks, Matt.